In this video, we're going to look at a really old Fidelity mutual fund. People have already retired and potentially passed away using this product, and it's lasted throughout their retirement. This is a great product that people have used for almost 40 years. So we're going to take a look at the oldest time horizon, but a great way to test out this product and see how it works throughout the different time horizons is using 30-year intervals. But we're just going to look at a pretty good withdrawal stream for the last 40 years. So today we're going to look at FBALX. This is the Fidelity Balance Fund. Taking a look at the performance, its 1-year return is almost 18%, its 3-year annualized return is just over 15%, its 5-year annualized return almost 9%, and its 10-year annualized return 11.5%. So today though, we're looking back a few decades. This isn't going to help us. We want to make sure an investment like this is going to last throughout our entire retirement, and this is a great investment to do so. This investment was made back in 1986. It has an expense ratio of 0.46. This is a little higher than your average Vanguard or BlackRock fund, so we're going to take a look at really why people would buy this investment. I mean, there's billions of dollars in this right now, over 65 billion. So why do people like this fund? There's a lot of money in it. But it doesn't really matter if you like it or not, because we're going to build something better. We're not going to have a bias. Taking a look at the asset allocation, it's very heavy in domestic equities. Almost 63% of your money is going into American companies, and only 2.5% are going overseas. Now, if you really want to look closely here, this is closer to a 65-35 split. Most balanced funds are going to be a 60-40, but Fidelity is just doing things a little different. This is how they feel is the best way. I mean, they want your money. They have $65 billion. I'm pretty sure they would like another $65 billion in this fund. But I'm going to show you how to make it better. So after 40 years, you still have a little over $400,000. And in all that time, you've withdrawn over $3 million to fund your retirement. At the end of your retirement, you're going to be pulling out closer to $120,000 a year. Taking a look at the chart, you can see the fund lasted through the late 80s, the dot-com crash, the '08 crisis, 2020, and the 2022 bond stock incident. When everything lost. Why you should maybe have cash in your account. Bonds can lose too. People aren't really used to this, but when there's an inverted yield curve, you really want low-term bonds. Your ultra shorts. So let's make this better with Invest USA. Now this isn't your standard, I'm going to click the 60-40 button because we found out, hey, there's 65% equities in this portfolio. Basically, you can play around with the current ages, retirement age, and life expectancy age, or you can use your own and just let the software actually do what it's meant to do. But if you're that, hey, I really like a 65% split for the rest of my life, just keep the ages the same every time you rebalance your account. So we're just going to say there's a 58-year-old. They're thinking on retiring at 62, and they only think they're going to live to around 84 years old. What does this person do with $1 million? And what you're going to do is click Invest USA. It's going to figure out the calculation for you. And to build the turtle portfolio, we're going to put about 7.3% in emerging markets, 18% international, a little over 3% in a mid-cap ETF, almost 37% in a large cap value ETF, and the rest are going to be in some bonds. So let's test out this portfolio that we just built with Invest USA. Alright, so jumping back to Testfolio, we're going to go down and add a portfolio. So we have the Turtle portfolio with 7% HEEM, your emerging markets, 18% DBEF, 3% XMMO, 37% PVAL, 5% JPIB, 12% LQDH, and 18% STIP. How did this portfolio compare against FBALX? Now I know it's only a little over 5 years when it comes to performance, but in this short amount of time, the Turtle portfolio has outperformed FBAL about $150,000 Also interesting to note is this is a very easy portfolio to hold on to, considering in the drawdowns in the past 5 years, the Turtle portfolio had about half the drawdowns, and the volatility is less in this portfolio, giving it a way better Sharpe ratio. You're making more money with less risk. Now you can really see here in the 5-year graph that when the year hits, the money is withdrawn. Basically, that's how you pay yourself. Every January, you take out how much money you're going to need through the year, and that's all you have to do. You can put this in a money market, you can put this in a CD, whatever you want, but just make sure you have access to your money when you need it. I'm always going to say an ultra short is better than a CD, no matter what. You never know what's going to happen tomorrow. Just don't lock in your money. So hopefully this video showed you how simple it is to outperform these products that have worked for decades upon decades. You know, this investment is almost 40 years old. People have already lived, retired, and died using this fund. It has worked, and it will continue to work. Everyone kind of builds it the same way, but just doing it this way allows you to not have a bias. Fidelity is probably never going to have the best investment in every asset class. It's just almost impossible, basically. There's so much competition now. You have choice. You can choose to not buy this product and just click a few buttons on your own just using this software